Today's video, I'll be answering the question, can meme stocks beat the S&P 500? Is putting your money into some of the most popular and hyped up companies a real investment strategy that can beat the overall stock market return offered by the S&P 500? Or is the strategy doomed to fail, and is dollar cost averaging your hard-earned money into the S&P 500 still the most tried and true stock market strategy that you can have? It would be crazy to think that just gambling your money on a few specific hyped up companies and ignoring some of the most traditional and consistent investing advice offered by some of the greatest investors in the world like Warren Buffett, because it can look pretty appealing when you see a stock going up over 1,000% in just a week, and just dollar cost averaging your money can get a bit boring, and not really making much of a return in a short space of time can start to become a mundane process. I think a lot of people are enticed by the idea of the fast money that can come with meme stocks, but finding a balanced strategy of making a profit without losing all your money can be difficult to do. To answer the question if meme stocks can beat the S&P 500, we'll be looking at data collected from over 20 million wallstreetbets posts. If you're not familiar with wallstreetbets, it's essentially an online Reddit forum that is largely targeted at making massive gains in the stock market, primarily through meme stocks. Now, the data that I'll be looking at in this video is not my own. It was collected by Market Sentiment, and his link will be the first one down below in the description box, so check out his newsletter as he analyzes a lot of great stock market information. And if you want to check out the original article, it'll be down there as well. wallstreetbets has gained a lot of popularity over the past year with over 11 million users on the Reddit page, and this is largely because a lot of the up and coming meme stocks like GameStop, BlackBerry and AMC have been gaining massive value in very short spaces of time, and they are largely hyped up on the wallstreetbets page. But is there really something to the wallstreetbets investing strategy, or is it just all hype and speculation that's virtually the same as just gambling all of your money? So to get an accurate number of what's considered a recommendation from wallstreetbets, Market Sentiment has looked at over 20 million comments and looked at which stocks are discussed the most, because the more popular or the more mentions that a stock gets is more likely to result in someone investing into it, because it's not practical to look at every single comment that's left on the page. So this will be broken down in popularity based on number of mentions, and these recommendations will be shortlisted to give us a top 10 list of most recommended companies. This will give us a list of the top 10 stocks that have been recommended by wallstreetbets. If you are not familiar with the S&P 500, essentially it's just a collection of the top 500 biggest publicly traded companies in America. It's deemed to be an accurate representation of the overall stock market performance. It has some of the most recognizable companies in the world in it, like Google, Facebook and Amazon, and it is a very slow but consistent investment, giving you an average return of 8 to 10% per year. Essentially, it's the complete opposite of meme stocks, which are just hyped up short-term investments that have massive potential for a very short space of time, sometimes seeing returns of over 1,000% in a week. But again, with these massive gains also come massive losses, as often they will lose their value just as quickly as it was gained. More or less, their price is just ramped up from a lot of interest and speculation from investors trying to ride the wave and make some quick money. The returns for these top 10 most mentioned wallstreetbets companies will be looked at over a 1 week time frame, 1 month, and also until the current time point that this article was written. All of these returns will be compared to the SPY ETF, which has an identical performance to the S&P 500. So before we get into the returns of the top 10 most popular wallstreetbets stocks, if you had just invested in some of the most mentioned companies on wallstreetbets, you would have made a total of 2,613 investments, and of this 51% of them would have lost you money in the first week, and then a month later 60% of them would have lost you money. This is in comparison to the S&P 500, which would have given you a positive return of 66% in the first week and then 76% in the following month. And then of course, until the date where this article was written, you would have had a 100% chance of making a positive return. But consistency is not the return that wallstreetbets goes after. It's just looking for those few golden gems that will send your investment to the moon, in comparison to the S&P 500, which is all about a slow and consistent return. So if you look at some of the most popular stocks for wallstreetbets, you can see that this will greatly skew the percentage return that you can make from it. Even if you just get a handful of stocks right, this will greatly increase the amount of money that you can make through wallstreetbets, even if you had to pick a lot of losers in that process. And this is ultimately the goal with meme stocks, is just finding a few winners that will take your investment all the way to the moon. So if you look at the average return for the top 10 most mentioned companies on Wall Street Bets, at the 1 week time frame, you would have an average return of 2.45% in comparison to the S&P 500 return. So for that 1 week mark, the Wall Street Bets top 10 stocks would have beaten out the average market return by just under 2%. And then again at 1 month, it would have beaten it at 2.27%. And then finally till date, it would have beaten it out by 6%. But keeping in mind that these returns are largely related to a handful of stocks that really drive up that average return. Here is a list of the top 10 most mentioned companies, and if you had invested into these at every time point, these are the average returns that you would have gotten. So GameStop was mentioned the most. If you had invested into it on every occasion that it was mentioned, you would get an average return of 73%. And then following up from this, AMC is sitting at 112%, and then Tesla at 57%. So you can see that some of these mentioned companies really drive up that average return. But these results are just if you invested every single time these stocks were mentioned. But that's again not really where Wall Street Bets has its strength. Its strength comes from just holding a company for a very short space of time, getting in and out as fast as you can. So the biggest gains that you can expect to make, again unsurprisingly, are from GameStop, which has gone up 788% in just 1 week, followed second place by AMC, which is at 278%, and then in third, Sundial Growers, which is at 107%. So you can see here, this is really where Wall Street Bets has its strength, is those fast gains in a short space of time. And then again, unsurprisingly, the stocks that have made the biggest gains have also given you the biggest losses in the shortest space of time. So again, with GameStop, if you had invested on the 27th of January, then you would get a return of negative 73%. This negative return is replicated by Canberra Energy, and then finally Express, if you had invested on the 27th of January, then you would get a negative return of 63%. So this is again where you have to balance the risk versus reward with something like meme stocks offered by Wall Street Bets, that you can make a massive return in a short space of time, but you don't know at which point you're buying, if you're just buying in the bottom, the middle of the pump, or at the very top. And if you're buying at the top, that's where again you'll make those massive losses, because you'll be left holding the bag when everybody else sells off and loses their diamond hands. But what if you only wanted to invest in the most popular Wall Street Bet stocks, meaning those that have the greatest number of mentions? Again, you would have beaten out the average stock market return in all three different time points. So at 1 week, you would have gained an extra 16% in comparison to the overall market return, and then at 1 month you would have gained just under 21%, and then till date you would have gained just under 20% as well. This again is because you would have been reaping the massive gains that have come from a few companies like GameStop, AMC, and Tesla. So overall, as you can see, Wall Street Bets will beat out the overall stock market return, but this is not a very consistent or reliable strategy. Essentially, your reward of beating out the overall market is just based upon how much risk you're willing to take with your money, because as you saw, some of these stocks can drop over 70% in just a week. Now personally, I don't think this is a very advisable strategy or one that you should try and replicate for your own portfolio, but it can be exciting to put a bit of money aside for some of these meme stocks and see where they take you. But you should be prepared to potentially lose all of your investment if you do decide to take this route. Now that you're familiar with how investing exclusively in meme stocks will compare to putting your money in the S&P 500, you might want to learn about my top 7 investing mistakes. These will avoid you having to borderline gamble your money away on hyped up investments, and teach you some practical steps to make sure you maximize your returns in the stock market and avoid some common investing mistakes that can ultimately lose you a lot of money. Check this video out, as it's the video that I wish I saw earlier, and it would have saved me a lot of time, money, and effort had I known these things earlier.